Speaking about the broader markets, as SEBI is nudging mutual funds to guard investors against the potential risks building up in the mid and small cap market, we learned that mutual funds are likely to start making uniform granular disclosures across AMCs to enable investors to conduct a better risk assessment of the fund before investing. Surabhi, what do you have on that front?
So, Harmaz, what essentially is happening is that these are discussions that have been ongoing for months now between SEBI and the mutual fund body, that is AMFI. And finally, what has come out is the sense that at least we're picking up from sources is that there is no diktat specifically from SEBI in terms of changing definitions or classifications of what is, a small cap stock. Remember, there's a nomenclature that tells you in terms of market capitalization, 250 and beyond become the small cap sort of playground, so to speak. So there is no consensus right now, no indication that there's a change coming there. But what will change is more disclosure by mutual funds so that investors can do a better risk assessment and then decide if they want to park more money in small cap and mid cap funds, which have been drawing the bulk of the inflows. If you look at data of the last 12 months, large caps have not been the ones that are getting the money. It is mid and small caps. So what will these additional disclosures look like? Well, I'm given to understand that there are 4 broad categories that will be addressed. And this is going to be uniform across asset managers, probably starting from the 1st of April. What are these 4 buckets? There will be a valuation disclosure, some sort of a blended valuation indicator of the fund, whether the fund is a high PE fund or a low PE fund. So I asked people, how do you do that? Because, a small cap fund will have, let's say, 50 or 60 stocks. So it's going to be a blended indicative valuation measure that will be given out. So an investor has an idea whether the stocks are overvalued, undervalued, or fairly valued. Then there is liquidity. And this is the most important point, because the question is that when redemptions come, will investors get their money back or not? Can, AMCs redeem? Who will the buyers be? Now, internally, these metrics are available within AMCs, but now there is a very clear, idea that it needs to be put out on AMC website so investors have better understanding. So how do you derive this liquidity measure? It's going to be, computed based on the daily volume data that is there, the free float in the stocks that comprise the portfolio of that particular small cap or mid cap scheme. Then we come to volatility. Some of these measures actually are already out there in bits and pieces in the fact sheet here and there, but they're not very prominently displayed and there is not much emphasis on them. So, the beta of the blended portfolio, there's beta in individual stocks, and as an aggregate portfolio, what is the beta of the fund? What is the standard deviation? How many standard deviations above the mean is, the fund trading at an aggregate level? Some indication of beta as well. And last but not the least, a very clear idea of portfolio construct. Remember, all small cap funds don't have 100% small cap stocks. All mid cap funds don't have 100% mid cap stocks. There are, bits and pieces of large cap here and there thrown in the cash level. So all of this needs to be disclosed very clearly upfront in a standardized format across all mutual fund houses. That is what we are picking up. Now, having said this, it's probably important to also understand how portfolios have been constructed as of now. Like I said, that not all small cap funds have 100% small cap stocks. So ACE-MF and FISDM have identified funds which may be perhaps impacted in some way by a lot of these new discussions that are happening at the SEBI and AMFI level. Pavitra has been looking